Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name's Corey Kramer. Today we're going to be analyzing Microchip Technology stock, ticker MCHP. This one came in by request down in the comments section of one of my other videos. If you have a stock you would like me to take a look at on the channel, and just put it down in the comments. I'll get the ticker on the whiteboard behind me there. I've actually cleared off a bunch of them the past week or so. And eventually I'll make a video. If it's a stock that's in the S&P 500, like Microchip Technology, I post those on YouTube for free. The rest I post over on Patreon, and at the $5 tier a month level, you can request whatever stock you would like me to analyze, and I post those over there, whether they're in the S&P 500 or not. As long as they use one of the strategies that I share here on the channel. I have a couple that are exclusive to the full Cyclical Investors Club service over on Seeking Alpha. And if you join Patreon, you can get a big discount if you ever decide to join the full Cyclical Investors Club service there. And there I give full access basically to all my different strategies. Chat room, you can direct message me anytime. I have dozens of articles, hundreds of articles actually, and then every other week I usually put out just kind of a general update of whatever I'm working on or on my mind or whatever I feel like writing about along with whatever else is going on in the market or our positions and so forth. As always, this is not individual investing advice. This is just how I analyze stocks. So the first thing I would always check, especially for a semiconductor stock, is the historical earnings cyclicality. So using the fast graph, that's the dark green shaded area here. And if we go back in time, we can see that for a semiconductor business, they have moderately cyclical earnings. You see a 22% decline during the Great Recession. You see another 20% decline kind of coming. There was actually some economic softness in 2012. It was almost another recession. That might explain some of it, but they also just had a big bump in 2011. So for semiconductor stock business, this is not very cyclical compared to most. But it is still moderately cyclical historically before we even get into today. However, the stock price, if we look at it, so earnings declined 22%, but the stock price fell at least 60%. This doesn't measure the exact high to the exact low. So the stock price was much more deeply cyclical than the earnings. And this is good to know on one hand if you're holding a stock when it's potentially late in the cycle, like it was here. But it's also good to know when you're prepared to buy a stock, how cheap you might be able to buy it. If the market has a history of sending a stock down more than 60%, then sometimes it's wise to be patient and try to wait for that low price to hit. So other than that, the business looks great. Earnings are almost always growing over time and pretty steadily and dependably so. Now let's get to the more modern day here. I usually start about 2015 or 2016. So, fun fact, I bought this one during the March 2020 crash, almost exactly at the bottom, I think. And I took profits a little less than a year later, right around here, at the end of January 2021. And I made, let's see. So yeah, not quite at the exact bottom, but on 3/16, that was the week before the bottom. And sold a little less than a year later for 141% profit. So that worked out good. And I think the timing, or not the timing, but the judgment to get out, I sold a lot of stocks that had a history where the price was cyclical, like I just showed you, even if earnings weren't particularly cyclical, about this time, because I was getting a little defensive because of the boom bust from the pandemic that I thought would happen. That did actually happen. It didn't happen for Microchip until a year later than that. But I mean, if you look at the returns since then, even though it's near all-time high, it's only up about 23% in 3 years, right? So an 8% CAGR over this time. And a lot of that time it was actually lower. So the immediate bust off of the boom, the stock price fell more than 25%. So it's basically been choppy since then. So where does it stand now? Well, as we can see, we had a gigantic boom that basically lasted 3 years for these guys with 17%. Well, earnings went from, we'll call it $3 a share to $6 a share. So they doubled in 3 years, which is really fast. Historically, I think my earnings growth rate for these guys is around 14%, which is actually pretty high. I don't know if I counted this boom or not in that. But, they've grown. We can check, actually, on the Fast Graph. I do have a 25% off affiliate link for Fast Graphs down in the description if you're interested in trying this out. And you can do all these cool things that I'm doing here. So what I want to do is change the time frame to like pre-pandemic. Let's go here. We'll see what the earnings growth rate. Yeah, like 15%. That's just from point A to point B. Now it started at kind of a trough and it ended at like a big upswing. I mean, we can see if I shorten it, it gets down more to 14. That's about where I was at on my estimate, which is really good. There were a couple dips during there, so that's worth considering too. So until now, earnings have not been super duper cyclical. So I actually use an earnings-based analysis for this, but I do assume that we have these peak earnings before this decline that started right now. Now, right now, analysts are expecting earnings to fall pretty dramatically, down below $3 a share this year. But the stock price is actually it hasn't moved at all. So the market just doesn't care. I'm not sure what the market's thinking. Maybe, I really don't know. Now, obviously, semiconductors in general have just been on a tear. Unless you're like Intel or something, and probably every investor that's bought this stock is happy with it and isn't looking to like sell anytime soon, is my guess. So I don't know how much the stock price will sell off this time, but here is kind of what I'm looking at in terms of potentially when to buy. So my buy price is just a little under $60 a share. Right now it's at 94, we'll say. Let's see. So the peak earnings were $6.02 a share. And what I did, let me see. I don't know if I left. Yeah, so I just have a note about that. So the way I calculate this is really handy if earnings really do fall off of a cliff, because I can go back in time. I don't remember if I used this 2020 drawdown or the 2008 drawdown, but I take the peak earnings and the low stock price, which was like $26, and then the peak earnings was $3.28 per share. So I create a PE out of that, and then that way as earnings fall, the stock price valuation doesn't look extremely bad. Like if you look at the PE now, it's like 20, but if these earnings actually do play out, that'll be like a 40 PE if the stock price stays where it's at. So when earnings really fluctuate a lot, they don't always give the best clues of the valuation if we assume earnings will eventually recover like the market expects them to do. It'll look really expensive basically when it could actually be really cheap. So I went back to 2008 or 2020, I forget which one. I created the recession PE for these guys. Now let's go back and see what it was. So when I did that process, the recession PE was 8.1, and then I add 40% to that because I'm not trying to get the exact bottom. I just want to get like a decent price. I don't want to pay too much for a stock that could fall like 60%. And so when I use that metric with today's peak earnings and current price, that's how I get this buy price right here. So that's the recession buy price. Still needs to fall about, and this really shouldn't change too much because we definitely put in a solid peak with earnings. So that $6.02 that I'm using isn't going to change even if earnings fall to $2, because theoretically underpinning all this is the idea that these earnings are going to eventually come back. and that this will be temporary. That's like what's built into basically all this. So if it gets down there, I would definitely buy. I like the company a lot. They're always a little tricky when the price is sometimes cyclical. Now the earnings are more cyclical than the price. But if you buy them cheap enough and they're good quality business, then you can do really well. So, I mean, like I said, 140% in less than a year on it. So I don't mind taking profits and going trying to find a better deal rather than sitting through these kind of cycles. That's why I try to buy at the bottom, right? You get a lot of earnings in a very short period of time sometimes. Now that was a very quick cycle. Usually I like to get that within 5 years, and I'm still pretty happy. So, but if you're patient, I've bought this one and sold it once before. It can happen again. So if you found this useful, hit the subscribe button, hit the like button, and I'll see everybody later.